There it is. Audio is up. Got me talking to myself, trying to make sure everything's all set. Welcome back, guys. Justin R. Harris here, and the audio feed is working, and our switching mode is working. Everything is good to go. Thank you guys for tuning in for my live, where we cover real estate investments, the economy, trading, day trading, cryptocurrency. You guys know my specialty. My specialty is with real estate, especially with commercial, under the guidance, obviously, of KW. Doing what I do with investments, I have to do my best to stay on top of everything, not just with real estate, because with investments and when I guide my clients towards the better investments, it's key that I am aware of what's going on. And then what way to do that than to deliver that information right back to you guys, right? Bam. Let's just go over there and give you guys the knowledge, right? So in doing so, the common topics right now have been the consumer price index, numbers going up, et cetera, et cetera. What did I tell you guys on my last video? I went in depth. I told you what was coming. Listen, it's not a rumor. You go on to federalreserve.com. I told you guys they have it scheduled that it's coming up. Interest rates are coming up. Now, we talked about this last week, right? We said that the interest rates were going to go, and I said about 0.5, okay? Man, did they get aggressive and go 0.75. Now, my theory behind that, not that I am an economist, a financial advisor, I am a commercial and residential investment for real estate advisor. I can guide you there. I can do a pro forma. I could put that together. I could tell you what you expect to see in 10 years, et cetera, et cetera. We can scale up, scale down, get it ready for resale. We can do all that great stuff, right? As long as you pay me for your time, right? In this arena, I'm not going to put myself up there like these big dogs up there, but I do look and search for the right information and bring it to you guys, right? And on the Federal Reserve, they got it all scaled out. And I got to tell you, I saw it coming. I told everyone I knew. I said, watch, it's coming. Rates are coming up. And the rates came up, didn't they? They came up. So here's the thing. If it went up 0.75, we need to cut back and pull the reins hard, okay? So you can expect some more sell-offs in the market, okay? You're going to get some more panic sales. We're going to see what happens when we come into July and the next scheduled rate goes up. We have another schedule, okay? 0.5 was the schedule. We'll see if they have to go as aggressive as 0.75 again. This play out is really what's going to tell us in the next month to come, okay? So I have my agenda here because some of the other things I want to talk about, we got to cover what's going on with cryptocurrency right now. It's getting froggy, okay? We definitely have to cover the situation with supply and demand, which is the title of this video. And where I'm going with that, I actually have a theory, okay, with supply and demand that is going to shake this whole system up. This is what's going to correct it, okay? This is what's going to do it. So let's talk about cryptocurrency for a second. What is going on? So if you have Coinbase Pro, any of these platforms, I'm just naming those two because they're on the top of my head. I use Webull. I look at it. I monitor that way. Sometimes I go on Qcoin. You have these different products that are out there, right? They're all great for what they do. I'm not favoring any one more than the other. I am going to tell you, though, okay, it's common sense. You look at what's going on with the top dog, Bitcoin, okay, and you look at all the other minions below it, okay, and it's clear right there what controls what is influenced by what, because you just look at their charts. Look at the charts and the way they flow. Now, there are a few road dogs out there that do their own thing, all right? So, and it is what it is, okay? But for the majority of all those coins out there, you see it. You see what's going on, okay? You see what influences what. Exactly the play, right? The consistency, I guess, is what I want to say. I'm really trying to emphasize that. So, what influences Bitcoin? The US dollar, the one global reserve that you can go and take that money and buy anything all over the world, and no one's going to deny that US currency right now. And that's a problem in a good way because, okay, so I can go and I can buy whatever I want on the other side of this planet, and then I can turn it in. Guess what? Better than that, because there's so much corruption out there that most banks are going to rob the person. And when I say rob, I don't mean at gunpoint, okay, of that exchange because they got that money on the trade, right? So because the dollar is so valuable, they're going to overcharge that person for it and not give them as much as they would if they were to exchange it back into their local currency there. That's how much demand it has. That kind of crooked, underhanded stuff goes on. Okay. So that should tell you right there the influence that the US dollar has and the influence that the dollar has over the cryptocurrency right now. Okay. Because no matter what, at the end of the day, people want to be able to cash out. It is not on its own in the sense that people are not going to want to bring it back to some sort of fiat currency. We're just not there yet. We all get it. We understand the platform is great. We understand blockchain and the security. We get it. Okay. We understand the hot and cold with the wallets. I think people at this point should understand that entire concept. I hope so. Okay. But at the end of the day, it still comes down to the global currency. And so the United States has a responsibility, and the responsibility is to maintain that power of that dollar. And that's what's happening. It's the reality of things. Okay. Not ready to lose that yet until there is a complete control that the U.S. can have over the cryptocurrency industry, because once you lose control over a currency, you are not the superpower anymore. There's too much free range. You guys get that? Can't do that. So, with that being said, this is why we have the quantitative tightening. This is why the feds have to do their job. I told you guys last week, okay? This is how this is affecting everything. And I'm going to show you how it does full circle. I'm going to bring it right on back to real estate, okay? So, right now, we all understand the CPI, the Consumer Price Index, right? Which, you know what? I defined it because this is what I do. I want to make sure that you guys are getting the right education when I drop this information on you. So I went to BLS.gov, okay? U.S. Bureau of Labor Statistics, BLS, Bureau of Labor Statistics. Okay, .gov. So, and this is where the information is that you can find, and you can find the charts, and you can monitor this stuff, and you can see what's going on for your own good. Don't follow the media. Don't wait for them to tell you. Look at what's planned. Look at the information that's out there, the economic releases. They got publications. They have data tools. They even classrooms that explain this to the public because they have an obligation to do so. But not everyone looks into it. So shame on you, okay, if you're waiting for the idiot on YouTube to do a video to tell you. Don't wait on me, okay? Why would you do that? So here's what it states. Yeah. The Consumer Price Index is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. Indexes are available for the U.S. and various geographic areas. The area price data for select utility, automotive, fuel, and food items are also available. That is the breakdown of it. That's not the definition, obviously. That's the breakdown where they explain that. And I pulled the chart because I wanted to give you guys some information. But it's crazy because food, household food, 11%. This is insane. And so what does that mean? What does that 11% mean? So I went over to the chart, right? And it's actually 11.9. So that's been the increase in the cost. If you were to go back to May 2021, It was 0.7. Yeah, that's pretty bad, right? Let's go May 2020, 4.8. So there's a small hike there. So we see what happened. May 2019, 1.2. So prices went up, right? I went grocery shopping today. Yeah, prices went up. Okay. But what does that mean for you? We're going to get into that. So I did some more digging, okay? And I wanted to be able to understand, where are we headed? What is the grand scheme of things? This is what we need to understand. We are mentally preparing ourselves. This is what I like to do. Purpose of my videos is to educate and prepare you. I don't come on here to create a panic. You got other YouTubers that are out there that want to create a panic and hysteria and jump on these. I'm not doing that. I'm not here for that. I'm here to create a plan, to get you to think differently. And here's the different thought. Obviously, you don't worry about what you can't control, because what you can't control isn't going to do anything for you, right? You have to plan according to what you're capable of doing. If you're capable of buying real estate, you go buy real estate at this interest rate, because no matter what, it's the deal that works for you, right? You can't control the fact that it's going to go up and we're going to be at point, and we're going to be at over 8% by the end of the year. You have nothing to do with that, okay? Maybe we won't be over 8, but I think we are going to hit 8. That's just my guesstimation. So circling it around, bringing it full circle, we talked about what's happening. We see the quantitative tightening, the fact that the market is coming down, which is affected by the Fed Reserve, because when they sell off their bonds, okay, when they do that, and it's the mature ones, okay, when they sell off, you have to understand what's coming next. And what's next is the panic sales from everyone else in the market. So when all of this starts to happen and the stocks start plunging and plunging and plunging, and people are freaking out and it's all over the news and they're playing on your hysteria. So everyone's just, the whole panic vibe is going on, okay? You can go and you can run with that. But the smart, okay, you go run with the sheep if you want to do that. But the smart stay back and they pay attention, okay? Just kind of look ahead. Let everyone else run forward. You just watch. And you see what they do, okay? And you make your decisions as you get ready to move in the direction that you move in, and watch the sheep all run in the same direction and drop right into slaughter, okay? So understanding the tightening that I explained. Up rates, right? Sell off in the market, panic sales. We mentioned those 3. There's your quantitative tightening. And then we watch, okay? Meanwhile, we have the cost of goods going up, right? Why did that happen? We have fuel going up. Why did that happen? Understand these things. Understand them. Not because you're trying to make a change. You can't change any of that. What you can do is change the way you spend and what you do. What does that mean, Justin? Okay, I know, I get that. Okay, so here's how you pay attention. What do we know? We know that there was a shortage of goods for a while. Now, what are you seeing? What are you seeing in the news media now? I'm going to tell you what I saw. Washington Post. Target and Walmart are victims of their own inventory success. You see how they twist that title? You know, as a journalist, right, they have to put in titles that attract, right? Victims of their own success. That's not a success, because, and it's a play on words because they are a victim of it, but it's not a success because, let me give you the next article. This one's from AXIOS.com. Target offers rare clearance discount in Overstocked sale. Now, I just wanted to point out those 2, and that was a late article. I'm sorry, the latest article. That was June 17th. The other one was May. Okay. And these are just some of the bigger brands. This is happening across all the brands right now. They have an overstock. Well, you as a business, we understand supply and demand, right? I hope you guys understand supply and demand. It's real simple. If there's a scarcity of something, you can up the price because a lot of people want it. That's the demand. Okay, your supply is low, and so you can play with the pricing, right? And increase it, and it becomes a hotter commodity, so the value is higher, if you will. Okay, and then you have regulations and this and that that allow you to go only so high without really taking advantage of the public. Okay, it's basic rules. All right. However, when the opposite happens, okay, then you need to make a sale. You got to cut prices because you have too much product and not enough buyers because people have empty pockets right now because it's too expensive to drive to the store, or it's too expensive to leave your house right now because you can't afford to, because you can't get your car fixed, or because you can't do the things you want to do because you don't make enough money, because all your money goes to paying your rent because your rent tripled and all these different things. So taking that into thought, businesses now that sell products have to start dropping prices. So if the prices have to drop, you start balancing out your buyers, because now you're going to get more buyers because you're starting to get within a price range that they can afford to jump in their car and spend a little bit of gas that they do have to go and buy the goods that are finally at a price they can't afford, right? Let's reverse that. Let's go back. Wait a minute. We mentioned real estate. We mentioned quantitative tightening. We mentioned the fact that the Feds brought the interest rates up. So what does that do with the real estate? You shorten the amount of buyers that can qualify to purchase, right? So you slow that process down. So the sellers now have to say, oh, man, I can't get it sold. I got to come down in price and get it to a price range that the lender will approve and the person that's borrowing can now afford. Right? So, oh, wait a minute. That's how it all works. That's how you correct the economy. Did I just dumb it down for you? I'm not saying you're dumb. I'm saying I dumbed down the oversaturation of information that the public's putting out there in a way that makes you understand. Just put your seatbelt on and sit tight. Get ready and be ready. Go out there, make some investment decisions, make some money, because you can. This is the time. This is a wealth transfer if you are capable right now. Do some key decisions. Get ready. The economy is going to adjust itself. The U.S. is not going to let itself sink and lose position as a superpower. I promise you. And cryptocurrency, yes, there will be a change, because once the dollar balances out, people are going to go into some of the currencies that they trust. They have to. Okay, so I just want you guys to be aware of that. Don't get scared. Okay, they're going to be able to dial back some of the weaker coins. They have to fall off. There needs to be a point. Someone's got to get on there and say, hey, you know what? These little trash coins, I'm sorry, bye. It's stupid. You're stupid. You're stupid. Stop trying to jump out there and create a chance to make some quick money and get people to jump in, and then you dump them off. Okay, let's not do that. All right, let's make some purpose here now so we can move forward. There you go. Thank you guys for tuning in. Like, subscribe. I'm glad you guys checked out this video. And wow, that was deep. I told you I was going to drop some crazy stuff on you. It's what I do. It's what I do. See you guys. Peace.